Hello world, welcome to Building Black Wall Street. This video is going to be about the Dow Jones Industrial Average crossing 19,000 last week and how to interpret that as far as investing in stocks is concerned. Just to give you a brief history on the Dow Jones Industrial Average, I'm going to be referring to Wikipedia. I'm kind of going to be bouncing around on this article, so bear with me. Starts at the top saying the Dow Jones Industrial Average, also called DJIA. I'm going to move to where it says is a stock market index and one of the several indices created by Wall Street Journal editor and Dow Jones and Company co-founder Charles Dow. The industrial average was first calculated on May 26, 1896. I moved down on the article to where it says it is an index that shows how 30 large publicly owned companies based in the United States have traded during a standard trading session in the stock market. It is the second oldest U.S. market index after the Dow Jones Transportation Average, which was also created by Dow. I just wanted to catch some people up to speed and also give a little insight on the Dow Jones Industrial Average since this is the topic of this video. Anybody interested in learning more, refer to Wikipedia. The Dow Jones Industrial Average closed at 19,152.14 on November 25th, which represents the highest close ever for the Dow. Reason I wanted to show this close is because I'm going to be referring to an article from a couple of days ago, Tuesday, I believe, which kind of points out one perspective on how to look at the record high the Dow just reached. One I happen to kind of agree with. This is an opinion article written by a gentleman named Chuck Jeffy, I believe is how you pronounce that. And the title is Dow 19,000 is no cause for celebration. And I agree with that perspective just because the Dow doesn't represent the economy as a whole, or it's not a good representation of what the majority of the largest companies in the world are doing. I believe the S&P is a better barometer for the economy as a whole, looking at things from a macroeconomical standpoint, even though I am not a macroeconomic minded investor. I'm more of a microeconomic minded investor. So with that being said, I believe the S&P is also near its highest, if not at its high. And I think that's a good indicator that businesses as a whole, or the majority of the largest businesses, are doing pretty good. I'm going to dive into this article now to point out why the Dow really isn't the best barometer for what the biggest companies are doing, how well they're doing. At the bottom of the title of this article, it says celebrity benchmark hasn't been relevant for a long time. And I think it has some relevance, but sometimes it gets blown out of proportion in order for people to measure the market, where they could look at better indicators in my mind. I'm going to focus on a couple of paragraphs on this article, starting from focusing on the meaning of the Dow passing a landmark, however, misses the bigger point, which is that the Dow is a virtually meaningless benchmark. The Dow is important to people because it's what they know. the staple of every market-oriented website, every radio station market update, every newspaper's daily business section, and the centerpiece of the 20 seconds of coverage that every national newscast guarantees the investing world each day. That's the celebrity factor. Like your favorite or least favorite member of the Kardashian family, the Dow as an index is not particularly talented. Truthfully, the Dow hasn't been particularly relevant in the investing world for a long time. For more than a decade, in fact, the market has referred to the Standard & Poor's 500 or the Wilshire 5000 total market index. The Dow is too thin and poorly constructed to embody the total U.S. market. The article goes on to say, what is the Dow really? It's a price-weighted average of 30 actively traded blue-chip U.S. stocks. These 30 companies aren't all industrial, and there aren't enough securities in the index to make it a broad reflection of anything, even the sector it is named for. That last paragraph I just read really was the cause of me making this video, just to get people to understand that the Dow hitting 19,000 is not a broad reflection of anything. And I don't say that to say that you don't have a lot of huge companies doing well, but using the Dow as a barometer is a flawed look on the economy from a macroeconomic standpoint, and the S&P 500 would probably be the best barometer. I encourage people to really pay attention to what that does. And on that note, stay blessed and stay tuned. I'll continue to bring more videos focused on investing and empowering people financially. Peace.